So long as these teams are pedal to the metal on scaling and they don't get complacent, I think there are a bunch of chains here that are eventually going to hit that, like without question, like millions of TPS.
This episode is sponsored by Scale. Scale has differentiated itself from other layer ones by offering users a network of gas-free, interoperable EVML ones where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. To learn more about the gas-free architecture and growth of the Scale ecosystem, visit the Scale Research Hub at scale.space/research. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. Follow and reach out to Chaos Labs on X to learn more. Hey everyone, today's episode is sponsored by Glif. Glif is Filecoin's foundational DeFi primitive, enabling Filecoin holders to earn rewards on their Phil tokens by lending them to a diverse pool of Filecoin miners. Got Phil? Deposit it with Filecoin's first and most popular DeFi protocol by visiting glyph.io today.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
What's up, guys? Welcome back to another episode of OX Research. Today, it's myself joined by Ryan. Our our great, lovely friend Boccaccio has, and I quote, said, Ryan Connor's points are way too hard for me to compete with. So he's given up. He's given up completely on even trying to debate Ryan at this point. Maybe we'll see him on some future episodes, but he said he couldn't handle Cash Flows Connor anymore. It was too much.
Yeah, I heard he's taking time off to work on his takes. He's going to take a week. He's going to go to the gym. He's going to work out his takes, and he's going to come back better than ever. So, wishing him the best. I think he can pull through.
We're rooting for him, hoping the best. Hopefully, we'll see him back here for some more episodes shortly, at least. I guess getting into today, there's some maybe exciting news just from this week. I think a big one really was Pudgy Penguins and the PENGU token launch. This was pretty interesting, I think, for a few reasons. One, Pudgy Penguins themselves, the NFTs, and like all related, I think sort of NFT collections had a bit of a kind of crazy few weeks of volatility in terms of price in anticipation of this token drop. But then two, the PENGU token itself actually just this week dropped at like around initially a 6 billion FDV or so, and was allocated to NFT holders and things of that like, but also a wider community of like Ethereum OG users and Solana users, kind of a variety of different communities that receive this token. So I think that kind of the reactions have been a bit mixed in terms of some people got some free money and like that's great for them and they don't really care about Pudgy Penguins. They probably dumped it. Others maybe more question about. I think there's kind of this open question about whether PENGU is purely a meme coin, which I think it's kind of been described as, but it's sort of an open question at this point whether Pudgies or like the brand will use that going forward for any reason, for any utility or to drive value there. So I think that's kind of up for debate. I don't know, Ryan, if you had any specific thoughts here, but I can pull up, I think, relative or just sort of related to this, the Pudgy's floor price.
Yeah, it whipped around there quite a bit. It looked a lot like a stock that just paid an ex dividend, right? Like Carl Icahn takes the thing over. It has too much cash on the balance sheet. It's going to pay out a special dividend to investors, so you have to price that in, and then the price is going to automatically adjust downward as the dividend is paid on the ex div date or the issuance date. Yeah, so wild price action, but I mean, look, it was a moment to kind of like look back and reflect on what has happened with Pudgy. I think it's one of the most interesting stories in like the history of crypto. You know, I think Luca is super impressive and what he's done is super impressive. Luke himself, he's a self-made guy, kind of like fantastic marketing mind. Pudgy got to the market cap it got to, and got into Walmart with like no TV deal, no video game, no music, right? Like how IP typically gets into the stores, like it just was like pure IP. And I thought that that was pretty interesting. Like there's something to be said about Luca's execution there. Um, I think one of the bigger takeaways here is like you don't always need a DAO, right? Like this is a pretty centralized project. It's it's the Pudgy team and Luca. They have the sole IP rights. The IP rights are kind of distributed. I think each Pudgy holder can receive 5% royalties on items that leverage the IP that they own via the NFT, but there's a soft cap on that of 500K per NFT per year. So it's a pretty centralized model. Like Luke is very much directing it, and like great for them. Like they've generated a lot of value doing that. Um, yeah, interesting question on whether or not the Pengu token is a meme coin. I think like decisively it is not. Like again, centralized entity. Like you can argue there's optionality for a value capture there or some value flow back to token holders. So yeah, I wouldn't put it in the meme coin bucket. And I guess like finally, I think the bigger takeaway from like a more macro lens perspective is like why did they issue on Solana? They could have issued anywhere. And I think that you know, when you're thinking about like which ecosystem is going to quote unquote win, there is the reality of it is that like the projects and the chains that they issue on are somewhat a function of the ecosystem at large. And look, the more interesting ecosystems have the most interesting asset issuers, and asset issuers want to launch their token on places where they think they're going to get the highest valuation. Same reason why Alibaba wanted to issue stock in the United States, because they thought it was going to give them the highest valuation. It was the best capital market for them. And I think that Pengu is kind of an insight into what asset issuers are really like. Uh, Highly intelligent asset issuers are thinking today.
Yeah, I think you bring up great points across the board. Just in terms of like execution of the, by Luca or like the brand, the team, however you want to refer to it. It has been interesting to see Pudgy sort of be this kind of front runner in replacement of, or sort of like as a parallel to the, kind of Bored Ape Yacht Club of a prior cycle that um, tried to, I think, affect this a similar strategy of like building up this brand, and then did eventually launch an ape coin as well, and like tried to build some like games and IP and other thing leveraging that identity a little bit. And I think that brand has kind of faded into maybe not complete obscurity yet, but has definitely faded out of the limelight. Whereas there's definitely been some momentum building behind this Pudgy's brand. So to your point, like they definitely have been executing well, at least like getting the namesake into Walmart, etc. I think there's definitely been some good execution sort of successes out of that team. We'll see where it goes from here. I think it's like we're saying, it's not so clear as to whether like this token or whether any of the individual NFTs kind of how that will continue to drive, as it's sort of like a piece of IP and a bit different from like your typical maybe DeFi asset. Regardless, though, if we move on, I think the talking point there around ecosystems around Solana is a good one to drive us right into the kind of our next topic today. One that I think is interesting is we've been having some discussion internally as of recent, just around sort of like the acceleration of different blockchains, the acceleration of the technology. I think some previous conversations have kind of harped on this idea around the advancement from using Ethereum to using like Solana was like a sort of a 10x in user experience from like a fees perspective, from a speed perspective. You could maybe say more, whether that multiples of 10 or 100x, etc. But we're seeing sort of similar attempts at jumping in magnitude to something like a Sui or an Aptos from Solana today. And it opens up this question of, the Pudgies and the other meme coins of the world, they're launching, their assets, and brands are launching their assets on Solana today. But are there reasons that are driving the space for, towards that next level of scaling, to where, it becomes continually meaningful to drive the leading edge, and we need to go to, another 10x, 100x, 1000x in improvement, and another, 10,000x reduction in, fees, for example. Just thinking about it today, as compared to maybe the last cycle, when, the average user was on Ethereum. The cost to transact for like a consumer sort of regular user is basically nothing at this point. I don't think people are really thinking about pennies when they're running transactions. Now, bots and arbitrageurs and sophisticated actors are probably, they're factoring that into, their P&L and their strategies. But for the regular user, that's come down to a level where it's not really a friction point anymore. But it opens up this question of, Solana has shifted their focus to, IBRL, like increased bandwidth, reduced latency. And we're seeing these next gen kind of chains that a lot of them are focused on this same idea of, we need to push 10,000 TPS, 100,000 TPS, etc. And we're willing to pump the hardware, maybe be a little bit more centralized. I guess I'd be curious to get your thoughts. You know, where do you see this driving to, and who who or what are the catalysts that kind of, over the next 5 years, that push us in that supposed direction? Like, can Solana continue to compete? If we get a Fire Dancer upgrade and other continued upgrades, like, will they be able to continue to compete against like this new oncoming generation of tech that, started from the ground up with this idea of, sort of another scale of capability? Or are they going to end up like the Ethereum of last cycle, where they've kind of been started to get a little bit displaced?
Yeah, I think it's all up to the folks in the Solana organization. I think that you look, if you decide that you want to stop scaling, like, yeah, I think of course someone else is going to take the lead. I mean, they have quite a liquidity advantage right now. I mean, as evidenced by kind of again, the move of asset issuers to that chain, and the very high amount of DEX volume. But like, there's no indication that that's happening, right? Like, Fire Dancers on the roadmap, like multiple leaders is on the roadmap. There's kind of like no end in sight to like where the scaling's going to go, and that's probably a cross chain, right? I think like scaling, so long as these teams have their, so long as these teams are pedal to the metal on scaling and they don't get complacent, I think there are a bunch of chains here that are eventually going to hit that, like without question, like millions of TPS, right? And this is also open source software, so if anyone can, crack the code that gets you there, it's going to be copied as best as it can by other chains coming to market. The So to me, it's not really a performance game, and I don't really even think it's a cost game anymore. It's a business development game. You always have that kind of wrench in the equation, where like if Apple launches a chain, like it's kind of over, like they have better distribution than everyone else. But assuming that things like that don't happen, like it's like foundation performance. Like, who's talking to founders and helping them build on the chain so that they can issue that new asset that gets traders like wanting to arb the value between that asset on different dexes and between its fundamentals. So yeah, and I don't know. Is it true that Sui and Aptos are, 10x improvements on Solana cost and speed? Like, using the chain, I don't know if it's evident. And like, just looking at the like daily transaction numbers on Sui per day, like they're topping out at 6 million, 5 million. I think Solana is just reaching something like near all-time highs at 63 million a day. So, I mean, it could be a demand issue, but we know that Sui just kind of rolled over on load of like 5 or 6 million transactions a day. So, I don't know. It's not clear to me that um, even these kind of like next gen chains are are in the same league as Solana right now in terms of performance.
Yeah, and I guess some of that is, test numbers that get touted. Yeah, to your point, the bigger question might be, have they seen the relative demand required to, maybe push the existing chain to its limits, like we've seen with Solana, right? I think generally, the chain has been floating in like a 500 to 1,000 TPS range in terms of non-vote transactions for the past several months, and we know Base started to kind of hit the, or at least briefly, maybe hit the ceiling on their current level of scaling in like the near 100 TPS range. So yeah, to your point, I think some of that is still up in the air, and we have some of these upcoming teams as well, Monad and Mega Eths, et cetera, who, I think this is just a common trend is, kind of the next gen builders, they come up with the next gen number, whether it's a 10x or 100x of the current capabilities, but it's a little bit of a TBD from the test environment to the real environment, where you get, the kind of the uncertainties of, fees interplaying with, spam and the other issues that I think these teams have to deal with from like a network and a latency and, competition perspective of on-chain users.
Yeah, the test numbers, I'm not super in the weeds on the technical stuff. It matters a lot less to me than the like demeanor of the team and what they've been able to achieve thus far. Um, it's funny, like watching these test numbers come out over the last 4 years. I'd say like without fail, they kind of miss by 70 to 90%. So when you see those test numbers, it's always helpful to discount them heavily, which is fine. Like the test numbers coming out of this, coming out of like Fire Dancer, for example, if you get a 90% discount to that number, that's still great progress. Hopefully that's not the case, but it's great progress nonetheless. Um, it was kind of to shift gears though. The one thing isn't working on chain, I think, and it's like the perp stuff. I think after some conversations this week, it's quite clear that market makers do not like making markets on chain. The costs for them to submit orders and then cancel those orders, which they have to do quite frequently, is quite high. And the congestion that they face when doing those actions is most important, prevents them from risk managing. So kind of the way to think about it going forward, it's like market makers and high frequency traders are going to be the biggest value drivers of rev in these systems. So if you're thinking about tokens and who's going to benefit, it's like where can a market maker just and HFTs participate the most. And that's frankly how it shakes out in centralized exchanges too. It's not a perfect comparison, but it's they're both directionally true. um, was talking with the team that they think that actually that Perps on Sui is kind of the might be the first place where you can build that on-chain experience, where a market maker can submit and cancel orders just like they would for a similar cost to like a centralized Nasdaq type of thing. TBD on that though, because I don't think that there are any Perps solutions live on Sui today. But like, I don't know, may like it's like a few things could like throw a wrench in like what's going to be the dominant chain going forward at current trends. And it's like one, if just a new like Apple like player wants to participate, but then also like if one chain is just like purpose built for trading. um Maybe it's hyper liquid. I don't know if we want to go there.
Yeah, we can actually we can talk hyperlipid if you want to jump into that. I will say one thing that I think is maybe interesting to your point here, is that I do know, there's a few teams that, like on Solana, for example, that are exploring like maybe L2 based solutions from a perps perspective. So I believe like the Zeta team has been looking at an L2 solution there, as well as the Phoenix guys. I think it's Ellipsis Labs, um, are also looking at L2 solutions for just like going after these higher frequency trading, like sort of building out a higher frequency trading venue that settles to on chain, but might technically be off chain via something like an L2 based technology. I think it's interesting as well in the context of stuff like Magic Block, who's looking at like building out these ephemeral rollups where you could maybe do. I don't know how that might work in the context of trading live assets, but exploring that with like potentially gaming or other things where you could have some on-chain state from the L1 that's kind of locked in this contract, and then you could manipulate other variables kind of off-chain in this ephemeral rollup, and then kind of post the result of those activities later back to the L1 at greatly reduced cost, and while you're kind of interacting with that contract, do it at greatly increased speed and lower latency relative to trying to push all that through regular transactions on the chain. So but yeah, to your point, maybe maybe right now that does look like Hyperliquid solution of just making a super fast, super high throughput chain specifically focused for. I mean, they've started out with the purpose of making this highly performant and usable, PerpDEX essentially. And they're looking to expand that into being maybe more of a general purpose chain, but it started from this vision of making it a great product. Um, yeah, do you have deeper thoughts there on where they're headed or how we think about them today relative to the market?
Yeah, I'm I mean, I'm not prepared. I know that they're making an L1, but like, are they going to juice the L1 like a mega ETH, or is it going to be an Arbitrum like thing? That's the big open question for me.
I think it's unclear, and what I would imagine is that similar to kind of the existing product is that the experience. My guess, I think we're operating on speculation at this point. I don't think there's like heavily confirmed details here as to like the particular architecture. I could be wrong. Maybe there are, but it seems like given the approach that they took with Hyperliquid, the app, I would imagine a similar approach for the chain. So you'd start streamlined, and the focus is on make this thing really fast and performant. And if that requires, if it's like a single sequencer, or if it's like 4 servers or whatever, they're all co-located. Um, Whatever they have to do to kind of get the throughput and performance that they're going after, or the product experience, and then figure out kind of the maybe the decentralizing or other aspects to that tech later. That's sort of the approach I imagine, but I don't know if that's really confirmed or not at this point.
Yeah, it's like really critical, right? Like, um, there's a lot of liquidity there. There's a lot of kind of goodwill with the product. It has a great reputation. I mean, I feel that because universally, just like people that I speak with over the last 12 months have just universally said it's a fantastic product. Um, but like the question is then today, like I'm just like constantly thinking about the hype token and how to think about this valuation, and um, trading at like 55 times, call it like forward revenue. If you assume that they have like some perps like take rate on volume, and you assume that that volume 2x's over the next 12 months, I have them at 55 times. And that's just the perps product, right? Which is like kind of a reasonable valuation for crypto, but like probably tells you that without an L1, the story's over. Like there's kind of not a lot of margin of safety there. There was at $2, there's not at 25. Um, so then to me, it's like, okay, you have a lot of liquidity there. You can probably parlay it into a platform play and being a base layer L1 thing. So what are you going to look like? Are you going to look like, you want to be EVM compatible? If you look like Arbitrum, you're not going to get the same amount of throughput that you would if you were going the mega ETH route, and like the amount of throughput is going to scale that revenue number. That's going to like really impact your valuation. So like, I don't know, like thinking like, what is Arbitrum at now? Like 10 billion FDV for simple round numbers. Let's say there's a 50% probability that Hyperliquid can pull off an Arbitrum like ecosystem. It's like, okay, just like add 5 billion to the value to your price target today on FDV. And it's like, that's what Hype looks like as a platform play. which I think is a fine way of going about the valuation. Um, and I don't think that the Solana comp makes sense right now. What has achieved is took a lot of years, a lot of devs, and a lot of unique products launched there to like make that happen. And has been sufficiently battle tested to the point where it could get to the throughput and scale it is at today. So like I think that's a longer time horizon thing, and like so like that makes sense, right? Like 24 billion FDV today. Slap on half of an Arbitrum valuation to it, it gets you at 35 for a price target. Um, I don't think that's so bad, but I think I've said on past podcasts that like hype is undervalued, and of course it's repricing so quickly. I feel like it's a lot less true today, given that kind of reason. There's just like that, given that kind of like back of the napkin reasoning behind it.
Yeah, I do think there's a lot of things playing into this kind of positive price action for hype lately, right? Just the the lack of an insider allocation. I think kind of building up a community around it and giving them a healthy allocation of a token at maybe what at the time was a below kind of market value for the token based on the data that we have today, um, as well as this just strategy that they've executed of going product first, making a great product experience, and then looking to expand that afterwards. Whereas the kind of reverse approach, or this infra approach has been so common, I think, in the space for so many years now of like, build like the next big grand thing, the next great chain or the next great infrastructure stack that can command, a high FDV at launch. And then, let the builders come and build there. I think this is sort of the opposite, right? They've built kind of like this great Perps exchange and have had some success. And now it's like, well, we can expand further and capture, a broader sort of market share if we can build out like a chain with other products alongside it.
It's the failure of the app chain thesis. It's like these are liquidity network effect things. You want to own as much as the relationship as you possibly can. If you are a successful app chain, why would you stay that way? Right. And like it's kind of like similar to the Uniswap story where like people were saying like, oh, this is the success of app chains. Like precisely the opposite. It is the reality that it makes sense to be a platform. And these apps, when they can, they're going to keep trying to be platforms. Um, yeah, man, I don't know. Like, do you use Hype or do you use Hyperliquid? Like, what do you think about the product experience? Because that's the interesting part for me too. Is there's the come for the tool, stay for the network aspect of this. You haven't seen that much in crypto. Um, is it as good as folks say it is?
Yeah, I think for me this is a hard one because I'm not really a perps trader. So I've used it in the sense that like, I've made a few trades on it, maybe to like kind of farm some volume or what have you. And I've also used like within Telegram, I've used like PvP trade, which leverages Hyperliquid for, doing spot and perps trades just within the Telegram app, or within your chat rooms basically. But yeah, as like not a perps trader, it's hard for me to comment on whether it's like, this great product relative to others within the space. But that is like the overwhelming, I think, opinion, especially from people who have been, I think, using it, over the past year, regardless of whether or not they thought they were going to get a massive airdrop from it. Which obviously might be kind of, I think, inflecting the public opinion, over the past weeks, right? It's, it might have been a great product before. It's probably an incredible product now that maybe you can buy a house with it. But
Right.
I think it probably speaks for itself. I think that that they were sort of growing in market share of volumes. Um, it would be interesting to see that trend kind of if it continues and they maintain like their sort of stranglehold over on-chain perps like volume dominance or market dominance going forward. Then that would be an interesting like change of fate from prior examples where, for example, like dYdX, did their airdrop and, went to, their own chain, um, went after the, like sort of the same in a bit of a different well, it's actually kind of the same story. Build the product, and then they went to a generalized chain. But regardless, I don't know. We haven't seen this type of success completed before, where you're the number one contender, you drop the token, and your volume doesn't drop off. In this case, it's been they kind of rose to the number one spot, dropped the token, and now people like it even more, which is interesting.
Yeah. We've seen it. I remember a time when people were universally saying, like, after you drop the token, like, the activity is going to drop off too. It seemed like that was the story. That was the trend for like 8 straight months. And then I feel like maybe it was like Drift was one that dropped the token and you saw like a slight decline immediately, but then like it kept scaling. Um, yeah, Hype's another one that's kind of bucked that trend. Product focus. I think it's highlighting that product focus for sure. And maybe anti-Sybil things too. Like, I don't know, anytime I try to participate in one of these systems, like I'm getting asked for my email now. And I don't want to, I think if you're a casual farmer, you don't want to make more email addresses. Like that's a really pain in the ass.
Yeah.
Um, is Hype doing a second points program? I mean, they haven't given out all their tokens, right?
Yeah, it sounds like that. I don't know that this is 100% confirmed, but it sounds like there are maybe ongoing seasons for continued usage. So that could be playing into it, but you know, I think we'll have to see, if a period comes where there's a sustained downward trend in the price, that might change the market's opinion a little bit. I think it's easy to say that
Yeah.
it's the best product in the world, and you're trading it and you're holding it, and it's going up. Um, if that continues while the price declines, then that's an even stronger story to make.
Yeah, I mean, the kind of like the tail risk with all these perps products, I think, is institutional adoption.
Hmm.
Like proper traders wanting to trade on chain. Hyperliquid to me is still, I mean, it's probably the best of and closest institutional on the market, besides maybe one or two. But it still has isolated margin, right? Like there's not a sophisticated cross margining engine there. Um, and that's gonna be standard if you're a sophisticated trader, right?
The other thing that I think that they're aware of and trying to build out as well is just this, starting from like a sort of lack of spot token availability to kind of gradually adding in that presence and building up that sort of asset base, which if you're perps dex on base or Solana or Ethereum, right? Like those assets already exist there. So for them, they kind of have to build that up over time. Sorry.
Yeah, they need cross margin, because an institution is going to want to risk manage all their stuff in one place in an intelligent way. And like I overheard a conversation of like, oh, I have to like move my assets around, and like there was like disappointment about the UX. I was like, oh yeah, that's just isolated margin. Like that's the thing that they're missing. Regarding spot assets, like how does that even work? Like, there's no smart contracts. Like, how do you list an asset on this thing or launch an asset? I've seen that there are like hyperliquid launch pads popping up. Like, what's that process like?
Yeah, they have a Hyperliquid. They have an auction to list new tokens on the app or chain app, if you want to call it that, where basically these projects or individuals bid up kind of this auction price to secure the ticker and a spot to list. Those have been trending quite high. I'm looking for. I know there's a dashboard for this, um, but I believe, and I might be incorrect, but I believe they only list currently maybe one asset a day or one asset every few days or week. So there's been quite a bit of competition bidding up those new spots, and I think some of that has been, you know, um, kind of going after this sort of influx of capital to the app. I think, there's been some like people launching games, people launching meme coins, etc. It's kind of been going after that same kind of trading exuberance that we've seen on other chains like Sol and Base.
It's like so funny to think, just like, oh yeah, if these guys want to make like money out the gate, like they need a meme coin launch pad. Like it used to be like, oh, what DeFi primitives do they need? And now it's like, oh, one of the first things they need a meme coin launch pad.
Yeah, I think the market definitely like jumped on that pretty quickly, and I think we've seen. I mean, a lot of the tokens have done well, but it's not surprising given that hype has continued to do well. So I think that'd be similar to when XRP kind of had its move, and a bunch of the new sort of meme coins there also performed fairly well for a period. People were excited to slosh their capital around. As far as listing like other spot assets, I'm not positive on that process of getting additional other capital from if it's the sort of like ETHs and souls and similar assets of the world. But either way, I think they kind of have this process where they'll need to sort of build up that asset base to further support spot trading alongside the Perps product. Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, Skale. Scale is built different. Unlike other layer ones, Scale is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. Scale operates like the AWS infrastructure model where developers pay for space in the network in SKL tokens to validators. Essentially, Scale has chain fees and not gas fees. This allows for free transactions on Scale and has saved 46 million users over 9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. Visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. After 2 months of securing Jupiter, Edge has already secured $30 billion in volume and more than 60% of all Solana Perps volume. Edge is comprised of 3 components: high-precision price data with an integrated risk engine, automated delivery of real-time parameter adjustments on-chain, and secure delivery of custom data points via zero-knowledge proofs. Follow and reach out to Chaos Labs on X to learn more. Thanks again to Chaos Labs for sponsoring today's episode. Quick shout out to the sponsors of today's episode, Glif. Glif is Filecoin's foundational DeFi primitive, enabling Filecoin holders to earn rewards on their Phil tokens by lending them to a diverse pool of Filecoin miners. Similar to LSTs like Lido or Jito, Glif solves a major capital inefficiency for Filecoin. Glif currently has over 19 million Phil deposited and over 150 million Phil in total volume, and is backed by the Filecoin Foundation, Multicoin Capital, and more. Got Phil? Deposit it with Filecoin's first and most popular DeFi protocol by visiting glyph.io today. Thanks again to Glif for sponsoring today's episode. Maybe going on from there, I know you recently had a piece on Filecoin. Do you want to dive into? I think Filecoin is maybe one that listeners and the audience have not looked at in recent times. I guess I'd be curious, what's going on in that ecosystem, and what are the sort of interesting takeaways that people should know about Filecoin?
Yeah, totally. So, spent a few weeks having a ton of conversations with people building applications on Filecoin, applications in like storage and compute and other services, and then in DeFi. Just kind of like just take a step back. Yeah, like everyone kind of knows Filecoin, but like doesn't know Filecoin, which I think is interesting. Um, like just to keep it like brief because it can get overly technical, and I think that that's been kind of a problem with getting Filecoin's message across, is that like they need a comms person that can speak better to like the crypto natives and the degens that like really make capital like flow in these systems. um, but like long story short, there's this thing called IPFS that like in its like end state could lead to a lot of efficiency gains for the internet at large. Instead of storing files based on their location, so like the URL is like this like layered structure that finds like a box in a data center in a specific place. um, IPFS uses CIDs or content hashes where you don't search, you don't go to a specific location, you go to the nearest place where that file is, right? So it could, enable like bandwidth efficiencies for the greater internet, and lead to a more durable and decentralized internet. And the community is very, very enthusiastic about building this. If you think about like if you think of like product building versus like ideologically driven building, like I'm building a product because like I don't know, I want to make money, versus like I'm building this thing because like I believe it's the way the world should work. And I would think of like Ethereum like being over here. I would say like Filecoin is either there or further than the Ethereum folks. Like and I think it's something worth building toward if they can like get the efficiency gains and like the decentralization and the and the other benefits that like IPFS and Filecoin think that they can get. And Filecoin is incentivization layer on top of IPFS. So in order to make the system work, you need to incent storage providers to store that data, right? They're not going to do it for free in this decentralized fashion. So like Filecoin is that incentive layer. Historically, there have been a ton of impediments for Filecoin's growth. They have lacked enterprise functionality. Basically, you can like store stuff on Filecoin and like you can't get it back. Like you can't retrieve the data. Like they're like the storage providers are incentivized to store the data, not to retrieve it, which is a huge problem unless you like want something like archival storage, right? Um, there have been no smart contracts on Filecoin, very limited programmability, and certainly something that's not on par with like an EVM historically. And then as a consequence of that, there's been no DeFi. So like if you want to be a storage provider and like you needed like there's capex, you need to bootstrap these storage resources, you need to be like basically a mini data center operator, and you need to finance that. And financing that is hard. You'll probably have to do with equity rather than doing it permissionlessly on chain, and that's like a barrier to entry. If you're dealing in like crypto stuff and your revenue's denominated in crypto, or like there's just like questions, and it's just like harder to get financing in those in that kind of environment versus crypto rails. So in short, like there's been two upgrades to Filecoin recently over the last 12 months. It's the FEVM, an EVM compatible smart contract layer, and then IPC, which enables like interoperable sidechains and L2s on Filecoin. So looking much more like something that crypto folks are used to. And that has enabled startups to build like near feature parity AWS like subservices and DeFi protocols. So talked about retrieval earlier, how like you could store data, but you might not get it back. There are protocols that are incentivizing retrieval, and some of these storage providers are now like at par with AWS in terms of like an SLA for like, do you have my data when I ask for it? Like 9 nines of precision. It's a handful, it's small, but they're getting there. And the network as a whole, it's up and to the right in terms of their retrieval success rate. So if you need your data, you can get it. The other problem with Filecoin historically has just been like it's been geared more toward cold storage than hot storage. Cold storage is like, I work at a bank. I need to save a document for 7 years because like that's what the law says, and then I can dispose of it. You don't need to grab it all the time. Hot storage is like you need it immediately, right? It's like some like you're working on a doc with someone like at your job. Hot storage is like now a thing. It's slowly becoming a thing on Filecoin. And there's a bunch of projects working on that and making that again near feature parity with some cloud services. Storage is a name, Akave is a name, and then like DeFi is happening, and that to me is the most exciting thing, because if these storage providers want to get financing, basically they have to stake fill in order to provide services, because you need to be slashed if you don't do your job. Then they need to stake a lot of fill. I think it's like, let me just make sure I have this correct. TIBs. I think they need to store like 5K fill per terabyte, which is a lot. Sorry, per petabyte. yeah, a storage provider needs to store 5K fill per petabyte. So like you don't want to have to accumulate that yourself. You want to, deal in that fill via some financing arm. And now we have the DeFi primitives to do that. Fill is being de-risked because there are LSTs for Filecoin, right? So you could stake that fill and then move that liquidity if you need to, or like hedge that liquidity, right? And then there's like stable coins on chain, which like one of the big narrative problems for Filecoin is like you look up the revenue and it says there's none because it's not on chain. Like the best SPs, storage providers, will be doing like backroom deals, or sorry, like off chain deals, where, if they are storing data, they'll have like a legal written contract. We want to get that stuff on chain so that Filecoin can tell a story. Like there's real revenue here. And then there's like all these programmable things you can build around that. So like Glif, for example, they like tokenize the storage provider experience. So if you have some programmable revenue stream to a storage provider, like you can leverage that SP on chain to like take on additional leverage, like expand your business. So yeah, so I think like kind of like TLDR, just to wrap it up, like Filecoin is, I think, objectively at a inflection point. Like services are now possible there that people want to pay for. Feature parity with some um, CSP services is possible. And if you're a crypto degen that just cares about like throwing risk around on chain and generating some yield, you have those opportunities too, and no one's looking at Filecoin, right? So that could be interesting. You want to go where capital is scarce, and historically it's been pretty scarce on Filecoin.
That's an interesting point. On the DeFi side, it does raise questions to me just in terms of like the typical crypto user today. Um, like you mentioned, like I don't, they may have heard of Filecoin. I don't know if they hold or think or care about Filecoin at this point. But like you're saying, if there's these opportunities for like a sort of overlooked ecosystem where you can hold LSDs or play these different strategies that people are doing across all chains at this point, right? It's become I think very common for some folks to whether it's Solana or if it's Sui or Aptos or Base or just whatever the hot new thing is or the thing that's not being looked at, but has a new lending protocol or leveraged LST protocol, etc. Um, those are opportunities for people. It's maybe a question in terms of whether anyone who's not looking at Phil, I don't know if they would look to bridge their capital over from like a Base or a Sol or a Sui or like these hot ecosystems. But yeah, definitely worth checking out if this is sort of like a new kind of set of DeFi primitives based around um, the storage kind of product.
Yeah, there's a capital rotation game in crypto. I think it's going to last forever just because of
Yep.
the permissionless stuff, and you know, we have it's just it's a degen culture, right? And Filecoin has not even had a chance to participate in that historically. Like they did because they had a coin on Binance, but that was the most that anyone could participate in that. And like it's not the perfect place for DeFi, right? I think block times are going to be like 20 seconds.
Mhm.
But that didn't stop people from building weird things and participating on Bitcoin. And there's obviously not as much wealth on Filecoin, but there is capital that needs to go somewhere. And if you set up a bridge and you have smart contracts and you let people do interesting things, you can harness that degen energy for something useful. It's also like a good story for institutions. I think DPIN is, or sorry, I think TradFi institutions are going to love DPIN, and I think they're going to love DPIN because the revenue potential is uncorrelated to crypto fundamentals. Crypto is speculative. Everything looks like this massive leverage circle, and all the fundamentals are correlated to that massive like roller coaster of leverage. DPIN, like Hive Mapper is going to have ARR, and when token prices fall, Hive Mapper ARR is just like going to keep going the same way. And it's going to be the same thing for storage providers on Filecoin if they can get that PMF. And the thing that excites TradFi folks about putting something in their portfolio is if it's uncorrelated to the things that exist in their portfolio and it minimizes that volatility, and you have the potential for that with some of these Filecoin startups today if they can achieve PMF.
Yeah, that makes a lot of sense. That's a great point. Maybe hinging on, for one last topic, hinging on this idea of the kind of continuous speculative ball of money that I think we've historically seen in crypto. I know we've had some discussion about maybe this potential for a flippening of base relative to Solana in terms of DEX volumes. I know as of late, there's been a lot more excitement past month or so around base. A lot of the community, the ETH kind of community, has latched on to some of the newer projects that have turned up. The virtuals, clankers, etc. That have, within Solana land, it's sort of been like the pump fun and meme coin game, and I think that's maybe similar aspects of that have started to catch on in base, and just a lot of metrics have been accelerating for base. So I'm going to pull up some data here. I guess I'd want to ask though, like, what are your odds, or where do you see this going? Like, do you think it's likely or like a given that at some point we see base end up flipping Solana in, activity or DEX volumes? Today they kind of, just in terms from a throughput perspective, Solana has the edge in terms of, relative amount of transactions that can be pushed through. But base, Jesse and the team, they've been rapidly accelerating the throughput of the base chain, pumping that gas limit, I think on a weekly basis. And they've, recently kind of broken up above that sort of 100 TPS mark and continuing to scale. So what are your thoughts there?
Yeah, I think it's a very high probability that base flips Solana in DEX volume and similar KPIs. Um, Look, I think they're only like 2.5x off from Solana today. If you like have a 30-day look back period, or maybe it's like a weekly annualized look back or something. Um, and that's nothing. That's absolutely nothing. All you need actually is activity to die down on Solana, like kind of normalize, and activity to stay where it is on base or accelerate like a little bit. And you have base DEX volumes flipping Solana, which I think that Solana DEX volumes today are like some of the highest all time, and the only other chain to reach these levels is ETH. So it's basically been ETH and Solana, like looking back to 2021. So it'll put base in like this very like kind of like elite class if they can keep up the momentum, which like I think they obviously will. I think the AI meme coin or AI agent coin meta is like really real. Um, it's super interesting because it gives these like there's a lot of optionality in expanding these things into real products with real revenue. There's like this influencer angle that they can take where they create this like lore about themselves and can adjust to market like very dynamic market demands. And I think base is like I think Solana is technically in the lead, but base is like right there, and there's really enthusiastic and like talented AI folks building things on base. So like it's something to watch. I'm not making a call that like base becomes the dominant chain and no one ever competes again, but like from like a short term fundamentals perspective, like I think it's pretty likely that that base flips Solana on some pretty meaningful metrics.
Yeah, I pulled up the metrics from our own dashboards here. So we've got Sol DEX activity. So DEX volume on a weekly basis, they've been clipping at close to 40 to 50 billion over the past several weeks. There was a noticeable sort of peak at around 60 billion about a month ago, and it's dropped off to that sort of 45 billion range here in past few weeks. And if we pull up base on the same sort of perspective, then we're looking at around 14 billion today, but it has not had that same. I mean, they had a bit of a high point that same week, November 11th, but it seemed like they've continued to be sort of more up and to the right over these past several weeks. Whereas Solana, I think there has been a little bit of a noticeable maybe drop just a few weeks back, and it's even if the trend is still relatively flat or maybe even up and to the right again, base certainly seems to be accelerating on a relative basis. I think to the AI kind of agent and token perspective, it does seem like there's a lot of momentum and attention behind virtuals. It's definitely the largest like platform and individual kind of token in this category. But to your point, like certainly on Solana, there does seem to be like a at the current time like a greater depth, broader maybe overall community of developers going after this kind of category or narrative, whatever you want to call it. Um, so I think we'll sort of see where that goes. Virtuals has the opportunity to kind of continue expanding, and if you get a broader community starting to build out around that product, then you could see similar sort of success or just general like bit of a snowball effect that we've seen with like AI 16Z on Solana, for example, where you've got just lots and lots and lots of developers working on this open source ELIZA framework. I think there's a chance for Base to do the same thing, and I think there's such a big factor here for Base in that like Coinbase is just such an effective like onboarding brand institution company that they can you know direct their users to, if they are going on chain, to go on chain to Base. And they can build that into their products. They can build that into their exchange, et cetera. There's lots of ways they can go about doing that where they can, directly, encourage users to, if it's send USDC, send it on Base versus anywhere else. And I think that's a really strong factor for them.
Yeah, that distribution is key. I think that they have that advantage until the wallets can get like the money exchange licenses that they need in key like those states with the largest GDPs to make that happen, right? So like I, as a New York resident, cannot directly onboard to Phantom. I have to go through Coinbase, and I actually can't even use Kraken because they don't have a bit license. Like they have this very important um, monopoly on just like it's like a toll road, right? Like there's only one way to get in, and you got to pay that toll, and they can funnel that traffic to Base, which is like if this is a retail driven cycle, um, and that really heats up. Like it's just there's so many reasons why activities there's so many reasons why like Base can pretty likely flip Solana. It's retail activity. It's like Coinbase's distribution. It's kind of like this shot on goal with the AI meta. It's ETH market cap sitting there. Just having a big asset with a lot of market cap. Now that kind of like Arbitrum is like their DEX volumes rolling over, like that's gonna probably trade on Base now. And you saw in that data that you were showing. Yeah, there's a lot of reasons. Again, not a long term prediction, but like definitely a short term prediction that like Base is kind of it's not unlikely that they're going to flip.
Yeah, I think that's totally fair. And I think just both Base and Solana, I think these have been ecosystems that have been easy to root for. Just the team at Base, like their mission from day one has been to just scale and scale like crazy. And there've been periods where maybe they've had to pause that, but in general, like that's what they've been going after. And I think it's been great to see relative to the 50 100 L2s that have launched with your average vanilla EVM implementation with no major improvements, and then like maybe there's a brief period of farming tokens and then everyone moves on to the next thing. I think just the fact that Base's mission has been to like sort of reach for a crazy high bar, North Star, to go after, similar to like the developments we've seen from Solana and like on this trek towards like a Fire Dancer world. Um, it's been impressive, and I think that's I think that's what a lot of people have been waiting for and rooting for from a product perspective in the space. That for a long time was just, hey, we're building great infra, but it's like actually just a copy paste of the last thing. So it's refreshing.
Totally.
Awesome. Any other big takes for the listeners, or we call it there?
Big takes. I think that yeah, the biggest take in retrospect on this episode is that meme coin launch pads are critical infra. It's a DeFi primitive. You need it, and you can't have an ecosystem without it.
It's definitely been a strong point to get, your average degenerate, on-chain trench warrior over to your chain and dumping $10 into, their next potential 1 million X opportunity, which everyone believes and knows in their heart that they can and will eventually hit.
Yeah, every chain is doing it, right? Like every chain needs a meme coin launch pad. What new chains are coming to market? Like, I guarantee they have a meme coin launch pad on day one. Like Hyperlink kind
Certainly.
of like has theirs going on right now, or some like
Monad, I know there are teams building like a pump fund equivalent.
Yeah.
Mega ETH, I know Mega ETH has some, attention trading based apps, or an attention and trend trading app that's being developed, which is kind of similar. And I'm sure Bearchain will have them as well. I'm sure there's other chains I'm forgetting, but yeah, I think you're totally right, and it's become like a prerequisite at this point. You get the trading activity, and certainly, like if it's the validators or the market makers, it's whoever the more sophisticated actors on chain. I think they love it as well because it drives arbitrage and other trading opportunities for them to take advantage of. So
you need a DEX, you need borrow lend, you need stable coins, you need a launch pad.
the standard DeFi primitives have evolved. All right. Well, thanks everyone for listening, and we will see you guys next time. Thanks again to Scale for sponsoring today's episode. If you weren't already planning to, make sure to go check out Scale's ecosystem. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network, and visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.